Adani Enterprises as well came out with its numbers, so let's address those. We have with us the Group CFO, Jugeshinder Singh, joining in on the show right now. Mr. Singh, great to have you on the show. Firstly, walk us through what the quarterly highlights were like, and it's been a fabulous performance that one can see on a year-on-year basis. What contributed to the same?
Largely speaking, thank you so much for having us on the show for start. But I think largely this was driven by our core businesses, which is services plus our incubating businesses that have done really well. So airports, roads, data center, and traditional businesses like mining services and our trading businesses that have propelled this revenue forward. But this is secular growth across all our incubating businesses, so we're very, very pleased with it. It's not driven by any one particular area.
Okay. So share with us the latest developments then when it comes to project status of your green hydrogen business, which is at the, under Adani New Industries.
Yes, we're very pleased with the development there at Adani New Industries. So our manufacturing ecosystem, which is part of Adani New Industry, because we want to make sure that our final product, which is green electron for green hydrogen, is at the cheapest cost. So the manufacturing ecosystem is well underway. Our almost 2 gigawatt of TOPCon achieved its commercial completion. Another 2 will do that by June next year, so which will put us at 4 gigawatt of cell module lines. Our first wind turbine, 5.2 megawatt wind turbine, largest in India, is undergoing a certification process. We expect that to complete by February. So really excited by the fact that it's now, it's an idea has become a project and the project's moving ahead at full stream. So we expect somewhere around October 25 or March 26 that we'll have our first green hydrogen from this business. One other important element in all of this is the fact that our entire ecosystem development, which is within the SEZ, means that there's relative control in terms of how we are executing on the project. So the cell module lines, the wind turbine, the electrolyzers will start next year, and our site is already ready for 20 gigawatt. So we are very, very excited about where we are in the Adani New Industry process, and we are confident that we'll hit our targets of green hydrogen towards the end of 25 or early 26.
Robbie, also wanted your take regarding the entire airport sector. Now, that's seen a very strong recovery over the last 6 to 8 months in terms of the passenger movement. What's your outlook when it comes to Adani Airports? And if you can share the progress when it comes to the Navi Mumbai Airport as well.
Yeah, so Adani Airports, we are practically, you are right. I mean, your information is correct. We are nearly 90% pre-COVID numbers, which are a little bit ahead of schedule that we had forecast in our investment case. We thought that this will be achieved sometimes in 2023, but we are already there. So that's a good aspect, and that's largely driven by the fact that the Indian consumers doing well, inflation is contained, so people are traveling, and that has helped the airport business a lot. So right across secular, all of our 7 operating airports, we see this trend. Navi Mumbai construction is well underway. We will be on schedule in calendar year 24 to have the airport up and running. We don't expect any delays there. So Mumbai will have become 2-city airport sometimes in second half of 2024. The overall, in terms of the airport business as it is, our city side business development plans are well underway, so we expect that to start kicking in from 25-26. So in total, very, very confident about the airports business. We fundamentally believe that given where India is, given where per capita income is growing, that this business is poised for a rapid step up and growth.
Robbie, that's fair. And in fact, Adani Enterprises has been one of those incubator companies, and we have seen the massive wealth is generated for the investors as well. But let's talk about the data center business as well, right? Because that's something the street is talking about a lot more. You're commissioning your first data center at Chennai. Elaborate a bit more in terms of what's the plan when it comes to data centers.
So data centers twofold for us. One is that we see this business more as an integrated services plus the asset, which is the the physical buildings. So Chennai data center is up and running. We expect Noida to be ready, and again, it's under contract with one of the leading technology companies in the world, uh, on schedule in about 18 months' time. The land acquisition process is completed for Bengaluru, Hyderabad, Vizag, Kolkata, and Pune, and we are in process to complete approximately, give or take, 1 gigawatt of data center businesses by 2030, and and we will also ensure that all of our data center business runs on 100% renewable energy. So it's one of the unique developments in the context of India, and it will be on from day one to have minimal carbon footprint. So these will be large data center business, 100% green, full service, as well as the asset side. So all large names that you could think of are participant. Given confidentiality and other matters, we're not willing to at this position or able to disclose names. But as they commission, the names will be disclosed. So so very, very confident this business will be around 1 gigawatt by end of this decade, and green.
Robbie, good morning. Nikunj also joining in. Always lovely to connect with you. And I must say
Hey.
that the way Adani stocks have created wealth for shareholders, everybody is mesmerized and shareholders are excited. There is a lot of talk which, Robbie, has always happened, that where is the group headed in terms of maintaining the debt levels? And we've been tracking the developments of the group and on various public forums where they've indicated to investors where the debt equity ratio is headed, what our equity plans are. Before we wrap, why don't you walk us through that thought? Because that, in a sense, is the biggest indication which our viewers should look forward to. Managing cash flow, debt equity ratio, and plans to raise equity.
No, absolutely, Nikhil. Thank you for your question, and good to speak to you. I think this is a very important aspect that we've tried to address it at a number of platforms, and one, we owe it to our shareholders and owe it to stakeholder community, media, agencies, etc. See, we run at a group level, we have a policy, strategy, and a risk framework, and that framework basically is to have a risk-adjusted cost of capital for each business. So, for example, in a portfolio, we have businesses that have zero debt and businesses that have 6 times EBITDA debt, but that adjusted based on risk. Overall, our portfolio level risk should take us to approximately 3.3 times debt to EBITDA. Because we are primarily an infra platform, debt to equity is less relevant ratio. It is debt to EBITDA or a cash flow, which is more important to us. So the debt to EBITDA ratio, we would have around 3.3 to 3.3. That would put us in the first quartile globally of infra platforms. So we are at the low end of gearing and leverage on the global platform. That is our policy and risk that will remain for the next 10 years. So you're not going to see a deviation from that, because that is a risk-based analysis. On the equity element of it, the equity element of it becomes important, that you want to make sure that the growth is adequately funded, and especially now that we are going into a higher rate environment, that there's sufficient equity to fund the businesses to manage growth during a high rate environment. So there, if you notice, over the last 3 to 5 years, we've completed equity transactions with, say, Total, which is well over $4 billion, IHC $2 billion, QIA $500 million. So we've done over transactions the last 3 years. That would put us at top or number 1 and 2 in terms of the equity raised by Indian corporates in the last 3 years. Now we expect our equity program continues in that manner in the next 3 to 5 years as well. What the amounts will be driven by how we see the risk and how we see how much of equity we need to have to support our businesses. The third element of your question is the liquidity. From a liquidity point of view also, we have a specific policy. So if, say, for example, if our commitment to next 12 months is, say, we have to have fixed commitments of 100 rupees, then at a minimum, at a portfolio level, we maintain ready cash of 1.25 times that. So we will have 125 rupees of cash. And that is across the board. So although our operating companies are much higher than that, to 1.6, 1.7 times of their fixed commitment. So it is low gearing between 3 to 3 times at portfolio level, equity funding and equity program that is driven consistently and not just on episodic basis, and liquidity that is maintained at a very high level.
Just tempted to ask you one more last question, and this is a leap from what you said, that your equity plan of $14-15 billion which you've raised in last 3 years, it will continue. You're tempting a journalist to read in between lines, which is that the equity fundraising plan will continue and you could be in for more investments from big funds, sovereign entities going forward?
I will answer that question as yes.
Okay, and that's a firm yes, is what I would take at. Appreciate your time. Appreciate your time. Really appreciate your time. Look forward to meet you very soon next time you're in Mumbai, Robbie.
Absolutely. Thank you so much.